The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, welcome to the post-Super Bowl edition of TFNN. Wow, the last three Super Bowls. Can you believe that, folks? I just want to let you know at halftime, the odds of them coming back to win the game were 20-1. I to be playing in a charity poker tournament, little small potatoes, but we have a lot of fun and we donate most of the money to charity. But a lot of those guys are really gamblers and they have their little apples and those other things that they use. And they were telling him about, and I told him, I said, guys, that's a pretty good thing because, this guy's got a really good record of coming back, much like what Joe Montana and some of those other guys have done in the past. Anyway, it was a fantastic game, and it's too bad somebody has to lose, but, that's neither here nor there. I'm sure the O'Briens are very, 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 very happy. By the way, that's only the third time in NFL history, going back, you're talking a long time, folks, thousands of games that a team has come back from 19 points down in the fourth quarter. Let's relate that to trading, folks, because there's really a good analogy here. You never want to give up. You just got to keep going. You have to have your goal set out, your trading plan, and if it's solid, you're going to be okay. You just got to be able to, hang in there when things get tough, and believe me, they will. But that's what it's all about. You got to be able to pick yourself up. Remember, it's not the money you win, it's the money you don't lose. So keep that in mind. That's the main thing to focus on. Winners focus on how much money they can lose, and losers focus on how much money they can win. And that's the real difference. It's like a slot machine. Money goes in, but it doesn't come out. So you have to remember that as we do this. I want to take you down memory lane here, folks, because I'm looking at something shared by my good friend Jim Bartolioni. I look at these aspects, and one of the things we're going to look at here is the stock chart. This is the aspect chart of where the planets were during July of 1932. Actually, July 8th was the low. I have July 5th here, but I have to change that. I don't think it'll change too much, but you'll notice how most of the aspects are in the upper left-hand coordinate. That means that there's a lot of stuff going on at that particular time. To me, that just means there's a lot of cycles that are going. I don't know the implications of them or anything. I just noticed that when we have really key times in the market, and this is how we researched this with Jim Twentyman and with Dr. Ruth Miller back in the 1980s. That's what we really try to do. Now, there's two of them there's one that I want to show you. This is there's two of them here. I don't have the one from 1987, which was harmonic convergence, but I will tell you this: it looks exactly like the one we're looking at right here. This was the March 9th. 2009 low, and I remember this very, very vividly because I happened to, be doing some work with TFNN. I just started. I'd been on about a year, I guess, and my comment was this will be the biggest short covering rally in the history of the stock market. The Dow was at the 61% retracement of the low from 9. Here. I don't know what's going on. Oh, brother. Okay, let me see if I can get on the Skype. Okay, testing. Let's see if we get this thing going now. I guess I'm okay. Okay, great. Sorry. Okay, let's see if we can get this thing working here to make sure it's working. I'm getting an echo, Al. Is there any way you could stop the echo? Well, maybe that's it. We'll see what's happening. Okay. Anyway, we're looking at a situation here in the transits in the market that tell us that we are very, very close to something similar to what's happening in the markets. If you'll take a look here, the next one I'm going to show you is where we are today, coming in on February 5th. And again, you can see that all of the planets, their aspects are coming in right at the top. These are some of the things that we hear from Bill Meridian, of course, and then also from our good friend Norm Winsky. And by the way, we have to give Norm a hats off. He was right for 60 minutes. If the game would have stopped when it should have, the Falcons would have run, but unfortunately that didn't happen. But what an exciting game it was anyway. So watch that. Now, I wanted to go back and just show you what was happening during 2009 when we were making that bottom, because this was really important, because it could be, yes, you're going to have to say that Brady is the best ever. 5 Super Bowl rings, coming back like he's done time after time. Only champions do that, folks. So he certainly is one of the very, very best that we can see here. Okay, we're going to take a little break here, and we'll be right back. We want to go down memory lane to 2009, and we'll be right back. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at what happened in the NASDAQ and the S&P back on March the 5th and 9th. I remember that so vividly because the market rallied 40 handles going into Thursday, and then came right back down and touched the same low in the S&P 500. The NASDAQ actually went a tick or two under the low from May the 5th on the 9th, and then it started the monster rally. This could be the same type of scenario that we possibly saw on Friday because it left that island reversal up there, making it perfect. But then on Thursday, the market was still down, and then Friday morning the jobs report came out, and up and away. That's where it's going. So we want to watch it because something big is getting ready to happen. There's just too many things that are lining up that say that we're looking at something that could be very, very dramatic in here. I wanted to share something from the Commitment of Traders. One of our friends sent this in to us. This is the number of people that are long and short. As you can see here on the Commitment of Traders in the VIX index, they are very, very, very heavily short. In fact, at a record. They've never been this short, as you can see from the far right-hand side there. And you'll notice other times when they've had that red arrow down, you'll see that these things had pretty big rallies. My guess is this is going to be something big. Whether it happens in my lifetime, I'm not sure. I still have 5 weeks to go on the calls that we bought, but right now it looks a little bit beyond belief, almost like being a Pats fan at the break. But that's neither here nor there. We did start the show with the DAX index. I forgot to mention it because we were chattering about the football game. I want to bring that up to let you folks take a look at it. You see we had a move right down to the 78% level this morning, and then, of course, had a really, really strong rally. You can imagine it just did it. And that's 70 points in the DAX, folks. That's equivalent to about 90 handles in the E-mini S&P. So the DAX is not for the faint of heart, but, boy, when it moves, it really moves. So that's probably in relation to what German factory orders posted their biggest jump since December of 2014. This was furnished to us by one of our friends here at the Tiger Den that gives us really good information what we're looking at on some of these other things that we're watching. Now, I did wanted to bring to your attention one other thing that we've talked about before. Just give me 1 second. I have to set this up here. Oh, this is a very interesting chart here. Now, this is, I think, very, very important here today, because if we take a look at this, we're going to be looking at where we were Friday, and this is see where we are today. You'll notice that there's a very, very strong correlation between the price of gold and the price of the euro. The correlation is in the neighborhood of 85%. Now, the euro has turned down. We talked about that, the importance of that level of 99 and change in the dollar index, and also the importance of 108 and change in the euro, also very important. And now the euro is backed off over 100 pips from the high, telling us that there's a possibility that could be in. What's interesting today is, for the first time in quite some time, the gold is rallying in the face of a falling euro, which is against what it usually says, on a statistical basis. So that's another thing that you want to pay close attention to. Silver's backing down a little bit. Well, it's not backing down, but it's not acting nearly as strong as the gold is. So what we're assuming here is there's probably going to be a top of the gold market. And I'm saying that you might want to lighten up your positions today in the market. But if you want to, be careful, because you want to be able to look at buying it back if we get a $34 correction. We'll see what's ready to go on. We've had a question here about the wheat market, and I'll try to get it here in just a second. It'll only take me a little bit here to pull it up, and then we'll look at it. I hope there it is right here. And you'll see here that we have some interesting things happening in wheat. Towards the end of the week, folks, we have a full moon, and we have a lunar eclipse. Those are very, very powerful. These are some of the things that were on clay tablets from the 5,000 and 7,000 BC that Dr. Andrew Lowe talked about in his book, The Evolution of Technical Analysis, where he talked about the astrologers were the original technicians. So there's a strong correlation to wheat to move between full moons and new moons, and with the eclipse, that's even a more powerful thing. So we'll watch the 10th of February is coming in for this lunar eclipse that will be coming in with the full moon that we'll have. So that's what we're seeing in the market for the wheat. And one other commodity that we've been following quite a bit, of course, has been the soybean oil market. And we still believe that we've got a chance here in the soybean oil. We're trading a little above 44 right now, in the order of $44 a pound. And you'll see here that there's a possibility if we could get that soybean oil down a couple of dollars from where we are right now, that would be the first major ABCD correction in the bull market. That was H.M. Gartley's favorite trading advice, is to buy ABCD corrections in bull markets and to sell ABCD corrections in bear markets. So that would be one that if it lined up, it would look, pretty nice. And if you take a look at what we have going on in the soybean meal, you're going to see something very, very similar. But in this case, you're going to be seeing the market pulling back to the old highs of October and November, and it's going to be right at the 61% retracement. Well, right now, we are $4 away from that level, which is $400. Well, $400 in meal is not very much. So, you must wait for that price. That's at least my opinion. So I would wait and see, till that price gets there. I really wouldn't try to do anything with it. That's the bottom line of what we're watching. One other market that we've been following, and that is the cotton market. I'm following it for some of the folks here at TFNN. I frankly don't trade this very much, but boy, does it have a absolutely beautiful pattern here in the cotton. As you can see, we're making a double top. We went and touched the top from July of last year. We completed a 3-drive to a top pattern up here, and we have two 1.618 expansions coming in at the same price at the 77 and change. It's already back off a penny a pound from that level. So It's going to be very, very interesting from this level of what we have going on in the cotton, but it should be coming down. And the reason why I don't trade cotton, folks, it's just a personal preference. I had a bad experience 43 years ago with an order fill, and it was a fair fill. I just didn't realize it at the time. And since that time, I've not traded either cocoa, coffee, or sugar. None of those three. And with foreign exchange that we have now, you certainly don't need many of these things to be trading anyway. Okay, we'll take a break here. Wow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, we have a real treat for you. We have Lewis Winthorpe III on the line. John, are you there?
Billy Ray, how are you today?
Looking good, feeling good.
I love it.
How's the weather in Philadelphia?
Well, it's going to turn summer-like here in a day's time. I just wish I were out at the Sierra Nevada skiing out there at Tahoe. It looks like it's going to be just fabulous out there.
Well, I have some friends that are in that area, and they tell me that the snow is so high they can't even get the cars in. That's the problem. What can I do for you, my friend?
That's absolutely fabulous for them. So I wanted to just call in, thank you, and give you a supplement. Last week, you shared with us the significance of what gold has done since last December, where it's rallied up from that Fib 786 support down at the 1125 mark. And thank you so much for sharing that long-term monthly charts of the gold market, showing that perhaps the rally that's starting to get underway here is the next leg up off that first leg that we had last year. So thanks for giving us that perspective. And just to supplement something for you, I had to share with you an observation I had made over the weekend when I was studying gold priced in a variety of different currencies. And in the Tiger's Den, I posted a long-term monthly charts of gold priced in Japanese yen. And what you'll see when you look at that is gold priced in yen has been trading in a high-level sideways pattern since 2013. And, of course, we all know Japan is afflicted by massive unpayable debts, which it keeps adding to, and keeping it stable with the Bank of Japan just money printing endlessly. And so it kind of makes sense that gold and yen would be up at a high level and not falling back, just because in Japan, the Bank of Japan is essentially just debasing the currency, and the high gold price just reflects that. But after 4 years of just going sideways, it would appear to me gold is poised at almost any time, in yen that is, to surge higher again, whether it's this year or next. Of course, I can't say, but it does at least open up the mind to the possibility. So I just had to share that with you.
Well, I appreciate that, John. And people should realize that, when they're buying their gold in other currencies, like whether it's the yen or the euro or the Australian dollar, Canadian dollar, it's certainly at a different price, than what we have here in the United States, where it's based on the U.S. dollar. Now, most of the world, well, I shouldn't say most of the world, but a lot of the world still trades the dollar versus the gold, which is still the main currency in the world. But soon, we'll probably be sharing the limelight with, the Chinese renminbi and a few of the others. But right now, we're still the big daddy rabbit, as they say in the trade. So I do all my work based on the the U.S. dollar versus the gold, but I occasionally look at it. But in the back of your mind, when you're realizing you're trading it, when you're trading gold, you're trading money. And so that's one of the reasons why you see this tremendous correlation that you see in gold versus the euro. And you'll see the same thing if you did it with the dollar index. So these are the things that we're keeping an eye on, and it's one of the reasons why I've lightened up on the gold position today, is because of the fact that the euro is breaking down from that key level at that 108.50 level. We've already broken 100 and some points in one night, and since the dollar index held that level really strongly, we're very, very overbought in the gold. So I'm taking a little bit of a gamble here by getting out of position and hoping to be able to buy it back, in a few days. Hopefully in the lunar eclipse and the full moon on Friday, I'd like to see somewhere around $34 or more of a correction in gold into that, and then I want to be looking at it. It's got a chance for a really big move, John, if we can stay above this 1185 level, 1180. If we get below 1180, then all bets are off. But right now, it's still got that chance. So that's my game plan.
Yeah, thanks so much for sharing. Just one last parting thought I wanted to share. You had, of course, mentioned what is happening in the euro currency versus the dollar, and the impact, of course, that might have on the dollar price gold. Many people have remarked specifically, say, the past 12 and 18 months, how the dollar price of gold, of course, it's currently $12.30. The dollar price of gold has been moving virtually in lockstep with the movement of the Japanese yen. So when the gold price is moving up, the yen futures is moving up, and vice versa. What I will share with you is if, because of continuing debasement of the yen currency by the Bank of Japan, and of course they're doing that because they've got massively unpayable debts, and either they default on their debts and the system crashes, or they just keep money printing, which is yen debasement. Now, if this yen debasement and a 4 years sideways pattern in gold priced in yen, if this resolves with a major leg higher in the gold price, priced in yen, which the pattern suggests to me is entirely possible, if not likely. If that starts to unfold, what you'll see is that the gold price will start running, the dollar gold price, currently $12.30, will start to run dramatically faster higher than the yen futures. So if we get that situation where gold price starts running and yen futures don't, that's a signal to me that the gold and yen bull phase is reasserting, taking gold priced in dollars higher as well. So I just share that, and it would be something to be watching for, that gold-yen futures correlation to break down, and being prepared to open your mind and say, oh, this is bullish, stay with the long gold trade. So I just share that with you kind of for mental preparation's sake for the most part.
That's really good advice. And like you mentioned, these currencies, when you relate them to gold, are tremendously helpful, and especially when you got a major currency like the yen and all the games that you're playing over there. To me, I think the history books are going to go back and say, what were those people thinking? But that's neither here nor there. Maybe nothing will happen, but we'll see.
Yeah, we will see. Thanks so much.
Hey, thanks for calling in, John, and may God bless.
You as well.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, I'm going to talk a little bit about the Dow Jones here because this is what everybody looks at across the globe and also here. They really don't look at the New York Stock Exchange Index, which is the really way to look at the market. But if we look at what's happening with the Dow Jones, we should focus on the banking index. I posted a daily chart of the banking index. As you can see, it had this big gap up. Did not quite take out the old highs. This is basically due of the 190-point move in the Dow Jones. Over 100 points of it was related to the banking stocks. Most of it, of course, was that's what I want to talk about is the banking index. It is the chart for the daily banking index. Pretty soon we'll look at the weekly here, but we had this big gap up, and that was related to the big move in the Dow, which 110 points of that move was in the banking index. That's Goldman Sachs was up about 11. J.P. Morgan was up. American Express. All of them were in the banking sectors were all very strong. If we take a look at the weekly chart here on the banking index, you'll see here that we went up to that 1.618 expansion a few weeks ago. We hit it spot on at 95 and change. And we got as high as 92.85 yesterday. It's got a really nice channel. As you can see, that's a perfectly formed channel line. And these are why these channel lines are so very, very important when you're watching these things. So keep in mind that when you're trading the Dow, you're trading a index that is price weighted. It is not cap weighted. It's based on the price of the stock, not the total capitalization. And that certainly makes, a big difference what you're looking at as you're going through some of these charts. Now, if we look at the NASDAQ, as you can see here, we made a slightly higher high in the NASDAQ this morning. We'll probably make one a little bit later today, but as you can see here in the NASDAQ, looking at this hourly chart, that we've been up in this same range here for about 10 days from the 26th of January. Actually, it was the 26th. The high came in on the 27th, which was the new moon. That brought us down to a perfect 61% retracement, and now we're either in the process of making this three drive to a top pattern, or we're getting ready to break out to the upside. So you pays your money, you take your choice, and see which vehicle you want to look at on the way. But that's pretty much what we're looking at as we look at some of these markets unfolding here this morning. It's going to be interesting. Now, I want to look at one other one because there were two markets that were telling us that this rally was probably going to be a failed rally. And if you'll give me 1 second, I wanted to show you. I don't have it. Doggone it. We'll not worry about that. We'll go on to the next one here that I want to talk about. Up here it is. This is a composite. Just 1 second here. It's here again on the long-term NASDAQ. Now, this is the big NASDAQ that's got all of the things in it. You'll see that we're still completing this three drive to a top pattern. That's a 1.618 expansion from the high we made back in 2014, I believe. And it is it's usually an ending pattern, but sometimes these things, can continue going for a long time, and we've seen this happen before. So you don't want to get caught up in that. That's the bottom line as you're looking at some of these, is to not really get caught up in the move. I've had a question about exiting the gold position, folks. That's a combination of just looking at the action in silver and the action in the gold itself, and the fact that it related to the euro so strongly, well above 85% correlation, and the euro's been selling off. So I'm assuming that this means we're getting ready to finally sell off in the gold with a little bit of some type of a sell-off. Now, this was fortunate enough the market was up today when this was happening, because it gives you a chance. You're above the previous day's high. You haven't really run away to the upside as of yet, but I'm doing it for several different factors. The main factor is that we're at 50% level of the last high. Silver has not taken out the highs from either Thursday or Friday, nor has platinum. So that's telling us that it's just the gold market doing this. And in the fact that the euro is such a high correlation to the dollar, to the gold market, and that is down, I'm assuming that the gold's going to get a little tired here and back off. So that's what I'm looking at. Whether that's going to happen or not, really remains to be seen. But that's just my thinking behind the process of, exiting a position. You have to have some reasons for it. If the reasons you think are valid in your mind and they fit within your trading parameters, then that's it. But, gold has rallied $44 in 2 weeks from the buy spot down there at that 1184 level. And so this would be a logical time, to actually take a look at it from the to buy it back on a little bit cheaper. Now, you always run the risk that it takes off and leaves you behind. And if it does, the only thing you can do is place a buy stop. In this case, I would say if it gets above 1237 again, I would go back in the position on the long side and just begin to ride it up if it does that. Now, until it does that, you want to be flat the market. I'm not saying to sell it short here, but there is a possibility that we should get some type of a correction. We're up, I think, 7 days in a row, as I recall, that is in itself an outlier event, and we'll watch it. The main thing that's also in the back of my mind is we have this lunar eclipse and full moon coming in on Friday, and that is always, those lunar eclipses are really, really powerful. The trouble is you don't know what it's going to be to the upside or the downside, but it is a very, very powerful signal that you want to be watching, because when it goes, it really goes. That's the bottom line of what we're looking at when we're watching the gold and the silver. Long term, folks, it flat out looks really bullish. But there's no other way to look at it from my perspective. But if it starts selling off, we get below 1180 again, then this is all wrong, and we have to reevaluate, what we're looking at as we go through some of these. We've had a couple of questions about the copper market, and I'll bring this up here so that you can. Oh, 1 second, I got the wrong market. Just give me a second. We'll take you here. It is. Copper is right here, and as you can see, we had this massive triple top up here that worked out. Was really spot on a triple top, and just did about everything necessary. And we backed off well over 13 cents a pound so far in the copper, and thus far it is right at the level of the around a 12 or 265 a pound from this level. Remember that the Chinese are always strong buyers in copper, even though they're large producers. They also buy it on the spot market and they store it, and that sometimes gives demand. But on the copper, you'd be looking for at least a 61% retracement down to the 250 a pound level in copper. That would be the most logical spot to take a look at copper from the long side. And again, it gets down to 250 a pound. Those are the main ones that we're looking at. So keep those figures in mind as you walk through the trading week, which will be very exciting. But remember, we're going to have Rich Anderson on tomorrow, Anderson Capital Management, thank God, 877-927-6648.
I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, starting out the week here, I think the key thing to remember is the fact that we are still close to the all-time highs. We could certainly, make it to above that 20,100 again in the Dow Jones. As you can see from the chart that we've just posted on the New York Stock Exchange Index, we just made a 78% retracement as of Friday. We were sold off a tiny bit this morning, basically nothing. Still down very, very slightly, but that's the main reason. Also, on the gold position, if you happen to be long, all I can do would be to suggest that you put your stop under the low that we made on Friday, which is down quite a bit because the market rallied a great deal right after the jobs report. So you might want to put your stop just a little bit closer. I think if it gets down on the day from this level, down about another $3, that could be the possibility that we are getting ready to start this correction. Remember, it's just a possibility. It's certainly not a certainty. And one of the things that you hate to do is you take a nice profit in something and you leave so much on the table. So if the gold turns around and continues to go higher from here and you're out, I think you should probably put a buy stop around that 1238 level just to get back in, because as you remember from last December, we bottomed and we stayed there for well over 2 months on the slightly higher highs and higher bottoms, and then all of a sudden we started to explode well into the third week of the move, and it just never looked back. It moved over $200 an ounce without letting you in. So don't be afraid to buy strength. Prices are there for a reason. So the question is, how do you put your stop in? And one of the key factors is look at the previous day's low. And if you take that previous day's low out, then you're looking at something that tells you that the trend has possibly turned to the downside. That's basically all you're looking at. Now, I wanted to share with you one other one that everybody laughs about, but it's still viable, and that is the VIX index here. As you can see here, we got down below 11 in the VIX, and we're very close. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.